roll call. Mr. Gritchen?
Here.
Mr. Moon?
Here.
Mr. Walsh?
Here.
Dr. Keene? Mr. Sidney?
Here.
Ms. Haruska? Mr. Welch?
Here. All right, seeing we have a quorum, and also show for the record that we have Dr. Skinkis and Tim McGinnis and Pam Bilesma at the table. Also, Marianne Nardi is here also. So we'll start with discussion information items. We have no FOIA requests today, so let's talk about the monthly budget report. Tim?
You received in your packet the monthly budget report for the month of January. Our operating revenue for the month was $709,000. Total revenue is $730,000. I highlighted some of the more significant items. We did receive the mandated categorical reimbursements, that's special education and transportation reimbursements that we get from the state. That was $155,000. We received $113,000 in general state aid. Our normal receipt for general state aid is $69,000. The additional $43,000 that we received was recalculation of prior year. When people file property tax appeals, because the value of the property taxes comes off of the general state aid, when we have reductions in property taxes, that creates an increase in general state aid. And we pay Franzik and Radlick a fee to file those recalculations with the county and with the state rather to receive this refund. So we received $43,000 as a refund in general state aid. We also received, one of the things I highlighted was we received a $24,000 insurance refund. That's part of the liability insurance pool that we're a part of. That's where they close out a prior year where they've been holding money aside in case there were some other settlements. Once they close the year out, they take the money that's left from that year and they disperse it to all the school districts. And so we got our share was $24,275. Neither one of those two items, so a total of $67,000, was budgeted in this year's budget because we don't know about those ahead of time. The operating revenue for the first 7 months, $11,700,000, and the total revenue, $14.6 million. About 50% of budget. I also tried to highlight in the report some of the items that we know we're going to come in over budget. We've talked about the building rentals before. Those mandated categoricals, which are the reimbursements from the state, are probably going to come in over budget. Our IDEA grant that we received for special education, we budgeted it at $45,000. When LADSI actually gave us the final numbers, there was a sub-grant that they included in that, which was another $41,000. So that's going to come in $41,000 over our budget. And then I also highlighted the refunds that we have set up on property taxes were $848,000. Those are reductions in our property tax revenue. We've only reimbursed about $59,000 through the first 7 months. So we're going to come in obviously significantly less than that $848,000. The exact number I don't know. There's no really large property tax appeals that are out there, but there are a number of smaller ones. So which ones are going to come through, which ones the county's going to approve, I really wouldn't be able to determine. But we are going to see a significant savings in that area. On the expenditure side, total expenditures for the month were $1.8 million. Salary and benefits, again, the most significant item. Year to date, we're running about 59% of budget, and we're 58% of the way through the year, so we're pretty much on track there. And then a couple of the items, or one of the items that I highlighted, utilities, we're running about 42% of budget. I think we're going to come in about $100,000 between gas, electric, and the water bill that we pay to Riverside. About $100,000 overall under budget for the year when we get to the end of the year. Our operating fund balances were $4.8 million. That's a decrease of $952,000. Obviously, in the next 2 months, we're going to see the receipt of the spring property taxes, so that balance will increase from there. Also included in your packet is the revised audit from our auditing firm, as well as a letter that answers some of the questions that were brought up at the last, when the audit was presented back in
Last month.
And there were some questions regarding how the audit and the accruals are prepared. The financial statements that we receive from the Treasurer's Office are on a cash basis. Okay, what the auditors do at the end of the year is they convert that for their audited financial statements to an accrual basis. So they're adding in the revenue that we receive in July and August that really is meant for the prior year. You know, they're subtracting out revenue that we've received in the prior July and August that was meant for the prior year. So they're adjusting the financial statements that we get from the Treasurer's Office from a cash basis to an accrual basis. One of the items that came up was the TRS pass-through and whether or not that should be included in the budget. It's about $2.6 million, and I think it's something we can certainly put on the budget that we present to the state. But I wouldn't put it on the budget that we look at when we go for an approval, or in the budgeted numbers on the financial reports that you get every month. It's $2.6 million of money that we don't receive from the state. We don't pay to the teacher retirement system. It's money that just gets transferred over. So I think if you include it in the financial statements that we receive every month, or you include it in this budget, it really is just going to, it's not going to show a clear picture. You know, you're trying to show in this budget that you're at least a 20% fund balance. You know, $2.6 million on the revenue side, on the expenditure side, you're going to be 10 to 15% higher, and I think it's just not going to present a true picture of the finances for the district. I think you're trying to use this as a management tool, and that would, I think that would throw off the numbers a little bit.
Would you still keep a schedule of showing it by month?
We can take the amount and divide it up by month. Yeah, we can.
Okay.
Can do that. The new audit will be filed with the Township Treasurer's Office and with the County Treasurer. The only thing we file with the Illinois State Board of Education is the annual financial report. That wasn't changed, so the audit doesn't go to them. And then I think there are some other questions that were asked with regard to the audit that we're going to address at the Committee of the Whole meeting in February.
Is it the pleasure of the board to have the audit firm come back to the Committee of the Whole?
Well, let me ask a couple of questions first. There's a big difference between reconciling books after the fact and accruing transactions. We say in here they're accrued, and as you said, the budget we were given and asked to approve was on a cash basis. I mean, I know there's two accountants in here that maybe could say better than me, but as far as I can tell, we've never done an accrual. We do it on a cash basis, and they do. The auditor did an adjustment after to say on government accountings we're making these adjustments. That's different than accruing. And I highlighted the summer school for a particular purpose. The expenses were over for the year. The revenues were under for we're over budget. The revenues are almost like zero. So it appears to me that we don't account for the revenues and the expenses for the summer the same way. Whether we're accounting for one, this year and the next year, I don't know, but I'm struggling with this. Keep hearing we accrue. Is there some evidence or some entry you could show us where something got accrued last year or will be accrued this year? Because it makes a difference in how we're looking at the numbers. If we should be accruing and we're not, and we do, it's going to make our, not our cash go down, but it'll look like our, reserve went down for the year. And I keep hearing we accrue, and the auditor said, well, we checked, we accrued, but nobody's ever showed us something where we accrued an actual transaction. So I'm asking, yes, we put it on, and that is one of the issues that I would like for somebody to be able to tell us whether that actually happened or not.
Well, we don't set up we don't accrue any kind of entries on the financial statements. We don't give anything to the Treasurer's Office. They don't make any kind of an adjustment because what they're presenting, what they're processing is just on a cash basis. So I'm not quite, the auditors are setting up the amounts and adjusting our financial statements that come from the Treasurer's Office to add in the revenue that we didn't receive at the end of the year that we should have, to add in the expenditures that we had in July and August after the end of the fiscal year.
So it is a
But not-
conversion. They are converting it. That's all they're doing?
They're converting it, yes, they have to. That's the auditor's role, is to take our cash basis financial statements from the township treasurer and turn them into what they call modified accrual statements for the annual audit.
But the second thing is the budget. Now, and again, Mike, Tim, I don't want to, I'm not quite sure I understand, I don't want to go in deep today, we've got other things, but that $2.6 million item, my concern is the audit report has a budget showing historical numbers that have that number in there. But the budget that we put in front of the public, which was, we had a hearing and we approved, which also had the historical numbers from the year before, they're not the same. I don't understand how the auditor can come up later on unless he makes some notes of why he adjusted the budget numbers, how it can be different when we're getting an audit report than it was what we was presented at the public hearing and we approved as a board.
The budget's a cash budget, and this 2.6 million is not a cash item in or out to us.
I'm asking a completely different number. Tim's saying, question's not in there. There's an attachment to this audit report that says it's the budget from the, it's got budget numbers from the prior year. They don't match the budget that we approved.
They don't match the budget, the
The budget we
2011 budget
approved had
that's included
historical
in here?
numbers. This budget that we approved had the future year and had historical numbers.
Okay.
It had fiscal year-to-date 2010, final 2010, tentative 2011, if I have the right one. And maybe I picked up the wrong one. I grabbed the wrong one from home. So this year would be the next set of years.
11, 12.
But it had historical numbers. Those historical numbers in that audit report are different.
Okay, so you're saying like the 2011 numbers that are in this budget,
Are different than the
different than
numbers
what's-
that are in the budget that are attached to an audit report. And there's no explanation of why they're different.
Does that have any
Okay.
impact of that when we're getting them from the treasurer's office, it's on a cash basis, and some of that stuff is not?
well, no, I mean, that's something I'd have to go in and look at, the budget numbers in the audit and see where they're different from here. I don't know.
Well, I'm only bringing these 2 points up to say, I'm struggling with, how this works and what's being checked, and do we do an accrual, we save people, we report we do, and I'd like it clarified for at least me if 3 other people agree with that.
I
Tim,
agree.
so let's do this at the cow meeting. Could you be able to reconcile that, Joe? Could you?
Yep.
Do you have specific schedules in the audit that, the numbers, like Schedule 3? Or is it every column that says budget?
I started skimming through it, and I marked some on my hard copy. I could give Tim a copy of it.
All right, why don't
I
you
didn't
do that?
check every number, because once I saw a few of them off, I stopped looking.
Okay, so if you can give Tim those key and
Okay.
explain those differences. Any other questions on the budget report?
So
Yeah. Go on, Mike. No, you go, Mike.
the taxes are due March 1st for the community. And if they pay early, do we start getting credits from the township treasurer's office on a periodic, daily or weekly basis? Where, are we seeing money come in this week's, money coming in next week?
Yes,
And the bulk of the money, if people pay mostly towards the due date, will come in within the week after March 1st?
yes.
So we will see some revenue next month when we come here and look at the February 29th, 2012 numbers. Some of that money is already coming in.
Yes, the county treasurer, when they receive the money, they send it to us. So if they start receiving money early in February, then we receive it in February.
Well, they send it to the
To the township
and
treasurer.
as soon as they get it, they credit
They
us.
book it, yes.
Okay.
The other significant topic that I would like to raise is this, and again, see how other people feel, but this whole 58% we're 58% of the year, here's where we are. And, you know, Tim, it's very helpful when you explain this one, we're going to be over, this one will be over. But if you lay the numbers, the expenditures over the revenues to date, it would show that we're going to, if it continues exactly where we are, we're going to be, even with what you said, we're going to be $400,000 over budget this year. And part of the reason is there's certain things that we collected already or paid already, and we're not going to anymore. But if you do 58%, you don't know which those are. There's certain things that we haven't collected, like the second installment, which is huge, obviously. And then there's some other expenditures that'll come after. And there's some things where, okay, maybe 58% is where we think we should be, but we're either way below that or way above that, and it could be a revenue or it could be an expenditure. So to me, it's like, you know, 52-card pickup. I don't know exactly where it is, and it seems like we should look at the big items and know where we are versus budget. And I give the opposite example that Mike gave. The first installment, we've only collected 94% of it for certain of the funds, and the debt fund, we only collected like 80% or something. So if you look at it that way and think, we know we shouldn't be at 58% because we started collecting in November, right? I mean, I think you told us before it usually takes about 3 months to collect it. Right now, we're $300,000 short of what was budgeted for that installment. So does that mean we're going to be $300,000 short on revenue in that item this year, or does it mean their treasurer's behind and we're going to get $300,000 over the next few months? Or it's a pretty significant number. So I'm struggling with how we are able to decide to manage the funds when we just look at this. We're at 58%, and for some things that might be helpful and some it isn't. And what's really important is we just passed a policy that says we're going to be at 20% reserve, which is the bare minimum, and we're at 23 something, right? Well, last year we were in the black by 200,000. Kevin reported, right, to the different. That's 1%, right, on reserve.
Approximately, right.
About 200,000, right? Well, if you just threw the numbers together without analyzing it, we're 400,000 in the red right now. If you just did a 58% projection, that's 2% drop in our reserve. Now, based on what you said, even on the refunds, probably the refund itself will make up the difference. But, you know, who knows whether there's other big expense items that we're going to see or not. And I think we need to have a handle on at least the big items to look at like monthly or at least quarterly to say where are we for the year, so that we're looking at what we need to do for next year. If we came up $400,000 short this year, we have a bigger issue to face next year. If we come up $400 in the black this year, it helps us for next year. And it's just not possible to tell from the data that's being presented to us.
Yeah, I can, well, I guess that's what we need to, I need some direction from the board in terms of exactly what it is that you're looking for on a quarterly basis. You want to see something?
Well, yeah, I'm suggesting, I'm raising the issue here in this meeting to say, I think it's another thing that is important for us to get our hands on, and it could be discussed at a committee of the whole meeting. That's fine with me. I don't expect an answer today. But, you know, there's got to be, we've gotten the data downloaded before. There's got to be some way to download it and look at the big items and, you know, just look at the bigger ticket items and see where we're at. And again, I'm struggling a little why people haven't asked before. Maybe, you know, if your reserves are high, it's probably not as big of an issue, right? But when you're at the edge of where your reserves are going to be, you need to know that. You know, we're halfway through the year, making all of our plans for budgeting, cuts and everything that we're facing, and that's a pretty critical piece of information that should be weighed into the decision-making we have to do. So, again, I'm not looking for an answer today, or I don't know what the right answer is, but I think it's something that I've talked to Kevin that needs to be added to the support that's provided so that we get a handle where we are during the year and not just wait till a report comes out 2 months after the year's over and say, oh, well, we were 200,000 in the black. It's not really that helpful at that point.
All right, so how about we do this? Because we are on a cash basis, and we're not following the accounting 101 like a typical business would do. So like right now, I can tell you in the end of 2 months, where I'm at, sales-wise, profit-wise, expense-wise, and everything like that. I can't do that because I'm in a strapped to archaic system. But what I would like, maybe you could help us on a quarterly basis, is to identify maybe 10 key expense items, you know, maybe group them, or, you know what I mean, break it down, and compare them to where we're at in the budget and be able to explain to it. So right now, you might have an expense that is, it hits big in the first half of the year, but in the second half of the year, you don't see anything at all. So then you can be able to explain to us, say, guess what, I am right now at 94% of this, but there is no more expenditures because it's a front-end loaded expense. And then same way on the revenue side, like you did before with the revenue, just bringing that up, saying, hey, let me show you right now. Taxes came in this installment. This is where we're at with that. You know what I mean? This is where we're short, but this is where it's going to come in at. And be able to do that. But not do the whole budget, but look at key parameters.
That's something I'd have to do for the committee of the whole meeting.
Yeah.
Because the board
No.
meetings are so early, there just isn't time to do that kind of analysis.
But we can do that. We can do that. So at the committee whole meeting, we can put something down and look at that.
I think also it's important that we work through with the Finance Advisory Council, because this question's come up before, and what I've heard from the board in the past, over the last few months, is that the reports that Tim is giving are improved and have been helpful. And I hear some good points, you know, and as he highlighted tonight, like with the property tax appeals and some of those things. I mean, when 80% of your budget is salary and benefits, and then the next largest expenditure is our Aramark contract, there's only going to be a few really large ticket items that we need to track. The rest will be much less significant compared to those large expenditures. So what I'm thinking is we can have Tim put something together, and we'll try to get right now for next week, before the February Committee of the Whole, we were going to probably be pulling in personnel to be looking at cuts and some other reductions before the March meeting. So what I'm asking to the board tonight is this something that the board can wait on until the March Committee of the Whole, or is this something that they want to talk about in the February Committee of the Whole? Because if that's the case, we would need to pull in the Finance Council next week and see if Tim could put that information together next week so that they can look at it before the Committee of the Whole the week after. Does that kind of make, we're on about a 10-day window here of when you would need to pull that information, pull together the Finance Council, look at it, see what's a sufficient report for the board, and then report out on the 28th of February.
Well, I think if we could look at one item, and that's the first installment, because we're $300,000 in one fund and $600,000 in another, below what was projected. And, you know, if it's just coming in late, that's a lot different than if we're not going to collect it. That makes a huge difference of waiting 2 months to find out about it, in my mind.
Can you get that done that time?
Yes.
All right. So at the February cow, so let's timetable it out. February cow will come up and look at the installment, first installment, and look at where there's shortfalls or where it's coming in at being a good explanation of where we budgeted at, where we're at. Mm-hmm. And then for the March one, let's, you know, maybe before that, look at, okay, these are the items I'm going to look at for expense side, and these are the items I'm going to look for revenue side. You know what I mean? Just work from there, okay? You don't have to do the whole budget, but just look at some key areas.
So we'll look at property taxes for next meeting.
Okay.
And we'll bring the Finance Council for the cow meeting before March.
Okay.
I have a question. Tim's asking some really good questions that probably haven't been asked in 10 years, you know, considering we're a financial hole we got in because people weren't really keeping track of how much money we were losing or spending over what we were getting. I mean, it wasn't just the salaries, it was other stuff too. So I think we really need to get this under control. Now, I've just noted that Illinois Association of School Boards, some of the stuff they send us is maybe too simplistic. I don't know if you guys feel about that, but, I mean, is there some other resource that they have, you know, that could explain this a little better, how we're supposed to track this? Because we're not reinventing the wheel here, and I'm not totally grasping it. Tim's smarter than I am, and he's not grasping it. Maybe, Mike, you're totally grasping it. I don't know. But maybe instead of, you know, placing it all on Tim, maybe there's something, some other resource for us. Give us direction. So I don't know the answer to that.
Well, part of the revenue side of the house is you're at the mercy of the tax collecting bodies, whether it be the money we get in for the special education through the state when they pay us when they want to, or it's the money that comes in through the property tax collection. If they pay the property tax, then we get the money. And I'm not sure in our budget, did we say 98%? Did we say that we would try to collect 98% of what the total levy was? And then in March, you get to collect 55% of your last year's tax. And so then whoever pays that amount, we get our share of that amount. So if the economy is such that you don't collect at that particular time, you'll eventually get it through the property being sold or foreclosed or moved on. The taxes just don't disappear, but they have line items for the other ones. So it is a little bit more complicated, and just on the revenue side, to try to keep track of what you're going to expect. But in general, you're only going to expect it at 2 times during the year. Usually it's March 1st, and the second one is at the mercy of the whoever figures out how much each property is worth through the triennials, that they can then send out the bills to everybody. So even if our property isn't being reassessed or something, we pay the same rate on a property as people who are being reassessed, so they're not going to send our bill out until everything's resolved. And then every 3 years, as we saw a year or so ago, we didn't collect the money until a December, when we really should be collecting it in a September. So just on the revenue side, it takes some understanding to just experience it. It's not like any company that has sales throughout the year, or a car company that has end of the year sales, new bottle sales, and it's kind of more predictable. It's really a function of when the taxes are actually collected. We get our share. Then we also asked in the last couple of years for a line item for the amounts of money that we give back. Now, on some of these properties that have these, what they're called P-tabs, we give back the property tax out of our current revenue for tax that they paid in prior years. And so sometimes that's not as scientific as determining how much that is, but the board has over the last 3 or 4 years tried to negotiate with the property owners and try to get that a little bit more under control, and we have the attorneys working on some of that. Now, as far as the revenues go, and Gary can speak more to the insurance, I refer to him, but you have your salary schedules, on the expenses, you have your salary schedules, so you know in general how much they're going to make, and you don't necessarily know if they're going to jump a lane, but you know how much they're going to make, how much are the stipends you should expect to pay. And then one of the wild cards is the insurance. You know, we're paying for insurance that we don't even know what it's going to hit us. So, you know, I know Gary's in the last 6 months been trying really hard to get a handle on that, and we actually pay a lot of money on insurance for, among other things, people not currently on our rolls, which is part of the, you know, what we have here. It's part of the retirement package that goes out there, and they have options in the contract that allow them to cause expenditures to come out of our current money for people who aren't currently on our rolls, which is part of the contract that the board agreed to in the past, and it's an expense. And you know, medical is not getting any cheaper.
And other expenses that you've seen before is special education. All of a sudden your demand is here, and then all of a sudden increases up to here, and that's something that you can't say I'm not taking. Plus the other one is expenses outside with other learning institutions where we have to pay for to put children into schools and that stuff. So there's a whole bunch of jumble there. And I know when you throw that out, you don't mean it to us saying that, people haven't gotten hold of the budget and stuff like that. I'd like to remind you that 2 years ago, us three voted against the budget that was passed because we did not agree with, deficit to have the way the budget was set up right now. So we have looked at it. The problem you have is you're dealing with an archaic system, as we said before. You do not complete and approve a budget 3 months into when you're working with the budget. You do not have your revenue, especially the first revenue coming out for the first installment, sitting out there in limbo, not knowing when you're going to get it.
I just want to say, all you guys are helping go to the question, which is different from what I asked. I understand that, how the taxes come. I understand things change through the year. The problem is, I understand it's an archaic system, but it has been downloaded into Excel, so then you could work it. On page 3 of the budget report, for the education levy, now Mike brought the 98%. That's already built in there, that we're not going to collect it all. Right now, the unrealized is $377,776.71. I believe we were told earlier we should collect most, if not all of it, in November, December, and January. They're gone. Okay? And then if you turn to the page for the debt service, which might be different because I know it's supposed to match, on page 8, we're $630,000 unrealized. We only collected 82%. So all the things everybody said is true, but at this point in the year, we need to know if we're not going to collect these and if we're going to be between those two line items $1 million short. And it's not, archaic system doesn't help. Explaining how PTAB work doesn't help. It's like, this is reality. We're here, we had a budget, we're 7 out of 12, 58% of the way through the year. Are we going to be $1 million short in revenue? And the 55% was built into that, so that really shouldn't be the explanation.
Well, the explanation is, are the homeowners who are not paying their taxes going to pay their taxes in the cycle? That's the question. If they don't pay their taxes, we don't get their money, and I don't have an answer for who in the community out there is unable to pay their taxes. And yes, it's an indication that we didn't collect that money, but
And maybe we
it's
still
not
are.
something you can predict, whether they're going to come through and pay that before the end of the year or not.
I don't know, is that true or not? We can't call the county and say, we only got 94%. Do you expect we'll get, 5% more this year? Are they behind processing? There's no way to get additional information to find out?
I can contact them. They're usually not behind the process.
Okay.
But I'll have some more information in February meeting.
Okay. Any other questions on the budget report?
Surplus, I think he needs to address surplus.
Okay. Surplus, want to talk about surplus?
Well, you have down here, do you want to include that in your?
It's an item in the
It's a
agenda.
later item on the agenda.